So this meeting is being recorded based on few business profile members and salaried class students request. I have started uh, planning creating some kind of a walkthrough on how one can build a professional portfolio without having your fundamental knowledge. So as it is known fact that investing in financial markets needs a lot of skills, understanding, patience, and luck. So, how do we overcome all this problem and how we can build a professional portfolio is all about today's walkthrough. So, I'll help you with this 15 to 20 minutes of this presentation. Thereon, I'll open the dais for any question and answers if you have. So, let's start going forward. In case of any clarifications, I request members to note down your queries so that I'll after the session, I'll start taking up those questions from you, right? So let's start. So what we're going to learn today is something about personal finance understanding. Okay. What exactly the importance of personal finance in every individual's life, no matter whether you're a business profile or a salaried class or a student. It's most important for you to understand the importance of personal finance. Then we will understand how the various asset class written so far since 1981, right? Then we will understand how to analyze the mutual fund. Then we will learn how about what kind of equity skill sets you require to build a professional portfolio. Then we will understand how to build actually the portfolio, and then we will take you a walkthrough on a live access how to retrieve data from online, right? So this is all about your learning after this session, so hope you will like it, and let's go forward. So hope most of you agree with this. So, parents ask many doubts to their children, but fail to ask about investment related queries. Example, your parents, if you are a parent and you have a kid, so you should think in that way. Ki bhai, you ask a lot of questions to your son or a daughter. You may ask them in case you're trying to buy a laptop or you want to book an online ticket. So you get help from your kids, right? But when it comes in terms of investment related queries, normally you avoid asking your kids because you feel that your kid is still a young chap and he don't understand the value of money. Hence, you avoid asking these questions to your childrens. But if you look at uh, uh, the scenario from school level, 11th and 12th onwards, I think from 10th onwards, the students start learning about personal finance, what savings is all about, what investment is all about, how the growth should happen, how we should value the money. All these things normally the student learn from school level. From till college level, he keeps learning all this in a theory way. But the level of practical approach is lacking in today's trend, right? So that's the reason even students fear in responding their parents in terms of asking them, okay, by where are you investing? They fear asking their parents, where is your savings? Where are you putting up your savings? Either you're putting up in equity market or you're putting up your savings in mutual funds or a fixed deposit or bonds, etc. This is all about because the student don't understand or the level of understanding on the personal finance is less. Hence, I'll give you a practical example. Now, this practical example is something called a learning gap age-wise, right? So, if you are a parent listening to this session, or if you're a student listening to this session, I would highly appreciate to look up this slide. See, in the age 22, right? In the age 22, normally the student will be pursuing his PG or is pursuing a first year job. Hence, he does not have any savings habit at this age, right? When the age crosses 23 to 25, he might be pursuing his final year PG or the second or third year of his job incremental period where he'll not focus more on savings. When he crosses age of 25 to 30, that's a time when the incremental value for his job comes up, and then the proposal for the marriages comes up. Hence, that's a period where the huge expenses fall on individual, and hence the respective individual avoid looking at on a savings parameters. When the age crosses 30 and 35, that's a period when the respective individual gets an incremental job and gets a planning for school for their kids, right? And there is a huge expenses and not much of savings at that age. When he crosses age of 35 to 40, it is a time where he's earning good, but at the same time, the earning incremental period, along with the school fees, new home planning, the cost of an expenses is getting shoot up, and that's where he end up going into an home loan or kind of an education loan or etc. etc. The whole sort of a period till 35 to 40, there is a huge gap. If you look at if there's an analysis taken by IIM Ahmedabad stating that out of 100 people, if you ask, 95 people are currently falling into this kind of a category where they start looking at the saving aspect only after an age 40. So what we're trying to tell you here is, if as an individual, if you are focusing on personal finance, your personal finance knowledge should start from 11th standard onwards. That's the way you start understanding the value of money, and you know the each category period how to save and how to invest in the financial market, right? So now next slide, I will take you through what if, okay, chalo, I am not investing anywhere. I am not doing any savings. What if I'm earning a good money? What happens to my money? So now this is a analysis done by a Citibank once along with the IIM Ahmedabad, stating that Indian culture, once on the 30th you receive a salary, 65% of the salary goes for a loan kind of an aspects, which is on the credit card, personal loan, home loan, education loan, etc. Then the 22% of your cost goes to the entertainment cost, movie, tour, picnic, travel, etc. Then 10% of your cost goes towards rental, and the 3% is an emergency basic expenses. If you look at before 15th of every month, a salaried class, normally a salaried class, 90% of the salaried class completely get washed off with their savings the 15th day of a month. And what happens after 15th is they start borrowing money from with their friends, or they go for a short-term loans and they wait for a next monthly salary to get it clarified. To avoid all this problem in future, so we advise you to have a wise decision on personal finance at early stage. Okay, hope you understand the importance of the personal finance now. So I will take you through an historical asset class returns now going forward. So this slide talks about, if you have invested 1 rupee in the year 1981 in the different asset class, such as fixed deposit, gold, and equity, the 1 rupee in 39 years would have delivered you post-tax returns at 7.4% and gold as 9.15% and equity 17.70%. This is historical proof that if you have invested in the market, see how the graphs green color moves in the equity sensex market, right? This is something, it is not adjusted on the inflation. So you everyone understand what inflation is. So if not, please understand the inflation plays a vital role in any kind of an asset investment in the market. So now my next slide will talk about the same if I calculate with an inflation based adjusted returns, right? So last slide, if you have seen that your FD returns was 7.4% post tax, when I calculate an inflation return, then your FD return for the last 39 years falls at 0.38% returns, and gold at 2.43%, and equity at 9.86%. So if you look at the holistic view, one, where should he invest is, then he'll have to look at an alternate option as equity asset class. So equity asset class is somewhere is an high value return. At the same time, it's highly risky asset. But at the same time, if you're doing a wise kind of an investment, then you're making good money over a period of time, right? So how one has to invest in equity market? So I do not have a fundamental knowledge. I do not have a technical knowledge, as I said. So what one has to do with an investment ideology. So this is an actually an asset class for entire overseas market, which talks about any investment in the market, okay, which will not give you more better returns than 12 to 14% than equity. Rest of all the asset classes giving less than 11% in the market, right? This is I'm talking about 20 years average return now, right? So if you look at if you wanted to have a required skill set for a good result in terms of having a equity market result, then the four fundamental parameters you should be good at. One, with a fundamental knowledge, which talks about understanding the balance sheet of the company, right? And the second is a technical knowledge. Technical knowledge is all about understanding the charting platforms, right? And a third, it comes to the insider information, which is something you should know some good prior information about the company, what company's future plans or some kind of relevant data where you should keep reading a lot of magazines and the newspaper. Then it comes a slightly a patience and luck as well. Investing in equity market, it is important that your luck and patience should favor you also, right? So these are the important parameters. Now, if you ask me, sir, I do not have this kind of a knowledge, then how do I build my portfolio? And this session is all about that. So let's understand now, if you are a beginner, you do not have any kind of an idea how I should invest in equity market, then this slide is going to help you out. So first thing is foremost for the beginner, here we have something called a mutual fund. The mutual fund is for all kind of an investors who do not have any knowledge. They can directly participate in the. So now what does this mutual fund does? Why should I invest in mutual fund directly? So the investment in the mutual fund are basically a well managed diversified option where your you have a dedicated fund manager for a particular fund where he will be charging very low for you, and he'll be investing in all the better stock which you do not have a knowledge. He has a knowledge. He invests in the direct stocks, he participates in the debt and the bonds as well. Now if you have, assuming you have a 10,000 rupees and you wanted to invest in any of the stock, you will have to do a lot of uh, 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 understanding about the fundamental, etc. Do the homework and then you go and invest. Having 10,000 rupees, you cannot invest in debt or a bond market or treasury bills, because normally to get direct bonds and treasury from the market, you require a lot of big corpus to invest in, where the mutual fund helps it in making this diversified portfolio. So assuming if you have a 10,000 rupees, you can directly invest in the mutual fund, specified fund which you like it, and the fund manager helps you to build your portfolio on a diversified model, right? So always remember the mutual fund has a lower risk than involving directly yourself in the stock market. When you invest, you want to build a portfolio for 50 stocks, you cannot do it as an individual. But if you want to build the same 50 stock with a mutual fund, it is highly possible and highly professional as well. So if you understand the mutual funds model, then probably you should look at diversifying your bit of your fund from now on to look at some good kind of a mutual funds. Okay, right. So most of you in the group might be aware of how mutual fund works, but most of you not aware of how to pick up the mutual funds, right? So most of you, what usually does is get into a lot of research sites, get into mutual funds ranking. They'll find which is the best ranking, the second ranking, the third ranking. I'll go today and investing. But I would highly appreciate you'll have to look at how mutual fund basically works, right? So mutual funds, when you invest in mutual fund, make sure you do not pick up the mutual fund based on the returns, but it's based on your goal and objective, right? There are three layers of a mutual fund. First one has to understand. One is a structure, okay, which talks about open-ended funds, close-ended funds, and interval-based funds. Open-ended funds is somewhere anytime it is open. Close-ended funds, once open and a specified time it gets closed, you cannot get into. Interval funds which will not be opened at any between times, and it always available once in a time frame. When you get into an investment objective, there are different kind of a growth fund, income fund, balance fund, and margin funds. It is always based on your requirements. You need to pick up your funds on that. Now, special scheme fund, industry specific, when you say, no, pharma is going to do well, I don't know which kind of a fund I need to put in the pharma, then you should look at getting into a special scheme kind of a fund. And then you say, I want to trade only in Nifty, I'm interested only in Nifty or Bank Nifty, then you'll have to look at kind of index kind of a schemes, right? Then if you're looking at a specific sectorial theme, cyclical base of in stocks picking, then you'll have to sectorial schemes. Right? So, Anil, can you see somebody's audio is on?
Yes, sir. Noted.
Yeah. So now, how do I pick up those mutual fund? Getting into these parameters. Now, here it is something called uh, four models which you need to focus on. I would not like to get into more deep because if I get into more deep, this will take me at least 45 minutes to 1 hour to explain you all this model. To give you a snapshot, there are a lot of YouTube videos on this model. So if you get into and you can able to research on it, definitely you will get some kind of an idea to pick up the good mutual funds ranking. There is something called a Sharpie performance model, which helps to get you an expected future performance result. So before you pick up any kind of an mutual funds, you should look at their sharp performance. The sharp performance help you to compare similar portfolio or a funds with their lower returns. So this helps you a lot in analyzing whether you should invest in that particular fund or not. Then it comes to a trainer's performance model, which is also an excess. So I've given you some kind of a hint there. If you look at the excess return in this sense, refers to the return earned above the return that can be earned in a risk-free investment. So this is all a matrix which helps you to understand if any alpha kind of a returns the fund is going to deliver or not. Right. Then it comes to Jensen's performance model. This is also measuring the volatility as well as the average return above adjusted market risk ratio portfolio. So this is also is kind of one kind of a model which helps you to understand whether you need to pick up that mutual funds or not. Then it comes to the beta and standard deviation. So these are the one kind of an volatility index which is also been compared with the sharp performance model. Now, if you say, I do not have this kind of a knowledge, how do I analyze? Even I go to the YouTube video, I tried getting into this, but still I'm not able to pick up those kind of a fun. So we made your work very easy, right? So you can log in into our icons graph. I will show you in the last slide how you can better instead of going the last slide. I will show you now how you can pick up this kind of a mutual fund without analyzing. With all these models, we have already created an artificial intelligence based model. If you wish to participate into, you can get into, right? So just a second, I will open the screen for you. So the screen is getting open. Just a minute. I'll share the screen now to all. If you look at this is um, our portal which we have. So in this portal, if you log in, it's a portal.iconsgraph.com. You get in this, but this is the home screen. You have something called a mutual fund section here. Just click the mutual fund section here. Once you finish this UCC step 1, you automatically gets opened with this current quants recommended fund option. So what all you have to do is you just need to fill up this 5 questions here. What is your age, right? What is your net saving income you need to invest, and what is your duration, right? How many years holding period you wish to do it. your business profession, and whether you want ELSS kind of funds or not. The moment you submit here, immediately it will take you to the complete asset allocation, which are the funds large cap which you can buy. And if you look at the fund names, you can broadly, it is all throws away all the funds with the best ranking and the best. The objective of this platform, what we have created a benefit for the people is the difference what we carry is, you know, that ranking does not always remains the same. The ranking keep changing for a funds year on year. So most of the platforms will not give you an option to give you an alert. For example, if today if you have invested in Axis Blue Chip kind of a fund, and tomorrow the ranking falls down, no AMCs or no platform in the market which throws you an alert stating that the ranking has gone, so you need to move out and reshuffle to the next one. So this platform normally gives you an alert once you pick up the mutual fund here. So this gives you an alert on which kind of a funds you repeatedly should keeping reshuffling based on the ranking and based on the analysis which is doing. It is completely an automated machine learning platform, right? Hope you get this knowledge. So you need not to put a lot of your efforts to work on the formula. This is already done for you. So I will now take you to the presentation again. Okay, so let me take the presentation screen. Right. So these all things which we have just gone through on portal. So this makes your work very, very easy. Then, how do I pick a stock or a design portfolio? As it is known fact that, as we all know that, mutual fund basically as an approach where, your investment is required a lot of skills to understand, where the fund managers normally used to help us to do so. So when you're designing, when the mutual fund investments are done, your portfolio is designed based on the large cap, mid cap, and a small cap, and the multi cap portfolio, right? When you say a large cap, it is complete top 50 companies, and mid cap and small cap, then it is a top small and mid cap companies, and multi cap is a mixture of diversified portfolio. Now, when you're designing a stock, normally what you do is either you get the tips from the market, or you get advisory from the news channel, or normally you get some kind of book reading, and then probably you start picking up, or you look at some value investor copying. So I would highly appreciate to follow these steps, right? So let us understand live how to access data to build your equity portfolio without any fundamental knowledge. Now, there are three sites or more sites available for an mutual funds access. So I would like to take a value research site, right? So now I will take you through a value research site now. Just a sec. I will now share you the screen for it. 1 minute. Value research online. Now, since I use a value research much, so you can take money control, you can take Morningstar, anything will work out. So in value research, you plug in any of the good funds which you come in the market, right? Normally, when you log in, they probably give you some kind of a best fund available. So if you don't know, you just, let's assume you know some, will type some funds here, access long term. Now see the Axis long-term funds appears. Now the Axis long-term funds, you get complete data here, how it has performed for the last 1 year, 3 year, and 5 years. And then you see how it is trailing returns are falling, which are the peer comparison for this fund. When you say a peer comparison, which means like Axis Bank, these are the funds also hold same kind of uh, stocks, but a different kind of an asset allocations that I will tell you how it works for you, right? Now, if you see the stock selections are here, and if you see in the bottom, you will see the stock selection with sector and what is the trailing PE, 3 years high and 3 years low, right? So now we'll have to see how assets have been allocated, asset percentage. Now, this asset percentage basically, see, this is a fund house, right? And this asset, this is an AUM for this fund is being managed 28,239 crores. So now out of which your expense ratio is 0.78%, which has been taken from your cost when you invest it, which is very low, right? When you compare to your portfolio management, they charge around 3% to 3.5%. Sometimes it is 2.5%. It's kind of a ratio. So if you say 28,000 to 39 crores, then it is 9% of their allocation is into a Bajaj Finance, which means their investment are close to 2,700 crores in this particular stock. So anybody who's investing 2,700 crores odd money in a particular stock, which means the stock is not going to fall in a bigger, or would say the stock does not, the stock carries more value where you can hold it for a long term, right? So I have created a sheet. So I will show you how you can work on that sheet. It is a portfolio tracker. So I'm sharing you a portfolio tracker sheet now. Look, now I have copy paste all those stocks which are there in the particular stock. This is different fund. So I have just made it easy for you to get an access. So now you see these are the asset allocation done by the portfolio manager, right? So what I need to understand is how many financial stocks they have invested. Now if you look at, you see this one, so you'll understand. There is access and you see what is an allocation concentrated, and 1 minute. You look at the asset financial stocks, they have about 35% sector allocations. Okay, so they have a highest allocation in the financial sector. So understand which are those stocks in the financial sectors first. So that's where the Excel sheet is going to get useful for us. So I will shift to the Excel sheet now. Now look at this Excel sheet. So I need to understand financial stocks. Which are those financials? Normally, majority of the mutual fund segments will always be having higher allocation on the financial sector. So let's take up this, select the filter option and see financial stocks. Now you can see there are about 6 stocks they have invested heavily, right? It's about 38%. Now you have to pick up 2 stock from it, the top 2 stock on the allocation, which is a Bajaj Finance and HDFC. So I have this portfolio tracker now here. So I'll be taking up HDFC. I will be using the date. So this sheet I will share you. If anybody wants this sheet, I'll share you the email ID. Then I'll ask my team to share you this sheet personally to you, right? So I'm creating this portfolio today. So HDFC and Bajaj Finance, right? So what this sheet does is, at what rate I'm going to buy. So today's rate is about say 1,990, and then we say it is 2,500 you're buying. If you have set any targets limit, it's fine, or else you can leave off. And then this portfolio will start tracking you what all the ratios it is getting into. So if you want to set your stop loss target, etc., then if you look at here, what kind of an allocation you want. So most of the mutual fund companies are having an asset allocation of 30-35% in financial sector. So you can assume that I need only a 20% allocation for it, out of which I'm going to pick up 4 stock in financial market. So what I will do is I will start giving 5% asset allocation for each stock. So you can just share your 5%, 5%. You can start adding your stock here, right? So any stocks which you want, you can start adding your stocks here. And what you can do is you can change your investment. Say about I need to invest 1 lakh rupees. How this 1 lakh to be invested, right? This sheet will start talking about what kind of investment in the first slot you need to do, and second slot at what rate you need to do, and third slot what rate you need to do. So that's how it start calculating. In this way, you need to start building your portfolio just looking at the mutual fund portfolio derived into. So if you look at the mutual fund financial industry, then we'll have to look in the same way. You have to pick up some 3 mutual fund companies, take out the 3 mutual fund companies and try to pick up top 2 holdings of the respective mutual fund holding. I'm sure once you start building such portfolios, don't increase your stock size beyond 10 to 15. in size, because that becomes more easy for you to track, right? So if you start doing that in the long term perspective, these stocks will start yielding you a very good returns. Trust me, this has a very good knowledgeable investment which fund manager does. So you need to follow the fund managers accurately on that, right? So if you want to use this for say automobile, then there are automobile industry. Just select automobile industry. You get, these are the two companies where this fund has been invested, right? So you need to, so they have 2% allocation. You want to pick up this only, you can do it. Or if you want to pick up this Maruti Suzuki, you can do it. So you have to build such 2 3 companies in different kind of a mutual fund companies as well. So if you start building so much, I believe this is going to help you a lot in building an accurate portfolio model for you, right? I think that is suffice as of now. So let me share the screen now. I think I took much of your 30 minutes time. Right. So we're almost done. So that's all I need to give you a knowledge on the mutual fund and how to build your portfolio on this. So just to give you a two snips of what we are into, right? So we are into business organization strategy. We do a lot of due diligence, merger acquisitions, and portfolio risk management. We are a startup funders, and we do a lot of IPO due diligence as well. So I highly recommend, if you have not downloaded our app, please download our app, and it is absolutely free. And we normally used to provide you a lot of inputs on daily basis. Currently we are on providing you a lot of information in the free financial group. Please download it and keep in touch, so that we will be helping you to build your portfolio more effectively, right? Thank you very much. I think that's all from my end. So if anyone has a question need to put up, I am okay with to take up the questions if you want it. Actually stop. Okay. So is there anyone who wish to ask any questions?